Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, we're back here on YouTube and it's time for our Bitcoin update. Sorry it's been a bit quiet the last week or so on YouTube. It's just the run up into Christmas. It's absolutely manic. I'm sure any of you who celebrate it know that, and I'm sure any of you who celebrate it who have multiple young children know what I'm talking about. It's absolutely nuts. It's just one thing after another. I love all of it. It's absolutely wonderful, but my god, it keeps you busy. So I just haven't had time really to update YouTube, and probably won't now anymore until after Christmas. So this might be the last video until after Christmas. I'm prioritising the Patreon as usual. I've got I'm still getting my weekly exclusive videos out, replacement live streams where I can't commit to actual ones. Hopefully one more actual live stream before Christmas. I'm hoping this Saturday. So if you're a member, you hopefully are looking forward to that. And if you're not a member, you can potentially sign up now and enjoy that when it comes. But either way, we're going to go through the motions today with Bitcoin. I know this is getting a bit tiresome to some of our long-term members, but we're getting new subscribers to the YouTube channel every week. And a lot of these people are coming into the crypto space and Bitcoin for the first time. And I feel with all the bullshit, pardon my French, out there on the internet, most of which is just absolute nonsense, we need to give these individuals a grounding in what has come before, what has been witnessed so far, and what we can expect in the future. Now, caveat that last phrase, because obviously we don't know the future, we don't have a crystal ball, but we can make estimations and guesstimations and projections based on what has occurred in prior cycles. And it's the cycle analysis that we're going to start with as usual today. We're going to look at the 4-year cycle, we're going to look at the bull markets and the bear markets, we're going to look at the halving data as well, introduce our new people to all of that, and then we'll move on to the classical analysis, and then we'll move on to the Elliott wave analysis. Now, quick warning, things are getting a little convoluted on the short time frame, as I'm sure you would be aware with all the overlapping price data we've got at the moment regarding the Elliott wave counts. There are a lot of potential options and interpretations, and unfortunately until we get a more significant move one way or the other, we can't confirm what we're looking at. So prepare for a lot of potential confusion. I will try and break it down and make it as simple as possible, but there are a lot of interpretations and we're just going to have to go through them one at a time. Now, if that's what you're interested in, that's what you've come here for, feel free to skip forward in the video to the Elliott wave section and enjoy, hopefully. But if you are new to Bitcoin, to this channel, I encourage you now to sit down, get yourself a cup of tea, cup of coffee, and really soak up this first part of the video to give you a greater understanding of the asset we're talking about. Okay, so we're going to start by removing the Elliott wave count, and we're going to bring up our market cycle, bull markets and bear markets. So all I've done here is measure from low to low of each bear market low to the next one, giving us this 4-year cycle, and we can break this down into essentially 3 years going up, 1 year coming down. That's roughly it. It often doesn't feel like 3 years going up because first year is essentially accumulation, bottoming and accumulation. Second year is the breakout phase for previous highs, and the third year is the terminal phase and move to all the blow off top. So a lot of the Joe public who show up at the end of each cycle, I know I was one of them once. This is now my third rodeo. I've done this 3 times now, so I'm familiar with it. But I was one of Joe public showing up late in the day. You get a few months of insane price action followed by, roughly a year of getting repetitively kicked up the arse. And this is just the cycle. So we're going to encounter new people this cycle who haven't been through this before, and they're going to make the same mistakes. But hopefully, if they're paying attention and they're following Green Star Trading YouTube channel, maybe they'll have a chance of being aware of it before it bends them over. So we have essentially these 3 years going up, 1 year going back, and sometimes it's closer to a year, sometimes it's further away. So for example, we have 1148 days bull market of the 2011 to 13 bull market, followed by 413 day bear market. We have a 1064 day bull market for 15 to 17 cycle, followed by a 364 day bear market. We have 164 days again exactly for the 18 to 21 bull market, followed by 378-day bear market, and we are currently roughly 700 and something, I think, days through the current bull market, which we're projecting to be, since we have nothing better to go on, we're 777 days in, and we're projecting another 1,064 days. It could be more, or it could be the same as the prior bull cycles. This leaves us to get to the next low projected in a 4-year cycle. This leaves us a 385-day bear market. It could be longer, it could be shorter. So, based off of this projection, we get a peak, the finish line as I've called it here, the top of this next bull market, this terminal phase, will come in October 2025. It could be September, it could be November, but it will be, let's say, October 2025. We then get a year of bear market down into October, November 26, and we finish this 4-year cycle. Now, you might say, well, I don't believe the 4-year cycle is going to play out. Well, whoop-de-doo for you. Please provide evidence to the contrary, and not hearsay or conjecture or speculation as to why you believe that. Evidence would be nice. And since this is the only evidence we've got to go on, we might as well stick with it until it's broken. And I'm not saying it's a certainty, but it's a guide. So let's just use it as a guide. Okay, and that's all I'm suggesting. I'm not saying it's perfect, but I'm thinking if you're arguing to the contrary, please provide evidence why you're arguing to the contrary. Don't just say you don't believe it. That's meaningless. Now, anyway, so I've come across that too often, frequently recently, obviously, because it's obviously gotten under my skin a little bit. But either way, there you go. There's your 4-year cycle. Projected high of October 25, projected low of November 26. We can also express this cycle in crypto seasons. Now, this is entirely subjective. This is based on my observation of previous price behavior within each of these phases. So the spring essentially is that first swing up and swing low off of the bear market low. The first big move up and first big move back, very deep normally. And then we get the summer, which is the a post-accumulation move to the previous all-time high and then breakout, and then we have the terminal phase in autumn, which is normally a blow-off move. Now, it has been in the 2017 cycle and the 2013 cycle, but in the 2021 cycle, autumn was actually a double topping process. So we're well into summer now. We've had the first swing up and swing low. This was not a deep retracement like it was in the 2020 lows or like it was back in the 2015 lows. This was much more of a sideways move. And what this resulted in was us getting back to the previous all-time highs much sooner in summer than we have in previous cycles. For example, in the 2020 cycle, it was quite late, as you can see, more than 2/3 of the way through summer when we finally got into that breakout phase. When we go to the prior cycle as well, we can see that we didn't really clear those highs until once again maybe the last quarter of summer. Now in this one, we came back to the prior all-time cycle highs very early on in the first third of the summer, and it led to a very long sideways protracted correction. Because we came up sooner, we had to spend longer going sideways before we could move up again. Now we're not into autumn yet, but we're getting there, and that's why we've got these last 10 or 11 months or so, could be more, could be less, but last 10 months or so of the move into autumn. Now it could be a double topping process like before. I'm thinking, and it's just, this is a total bias based on the narratives around everything from the recent fallout of the American election, projected policy going forward, and a whole bunch of what I would consider to be tailwinds for crypto and Bitcoin. And therefore I believe that a blow-off autumn is more likely the case than a double topping process. But we will have to wait and see. The winter, of course, is the bear market. Nice and simple and obvious, okay? And that's our seasons. So we've covered our 4-year low to low, market bottom to market bottom. We've covered our bull markets and the bear markets in length, and we've covered our seasons, our expected finish line, and market bottom for the next one. So now let's move on to halving data. This is the next thing we're going to discuss. Okay, so the halving, or halvenings, or halvings. Let's talk about what we can expect, or at least what we have previously experienced in post-halving price moves in each of these cycles. So if we go back in time and we'll come down to the day time frame, see how much of a chart we can squeeze in here. So we had a halving on the 28th of November 2012. Okay, we're just going to clear the, stretch the chart a little bit so we can see this data. Now, of the entire move from the low of November 2011, the bottom of the prior bear market, through to the highs of December 2013, 98.96% of the entire price move of low to high occurred post-halving, post that date of the 28th of November 2012, and only 1.04% of the entire bull market occurred pre-halving. Now that 1.04% still represented a 513% gain, no small amount. Now the gain post-halving in price terms was 9,517%. Now if we move on to the next cycle, we can see that we had, of the entire move from the low of January 2015 through to the highs of December 17, the halving occurred on my birthday, the 9th of July 2016, and we saw that 97.44% of that total low to high cycle bull market, 97.44% of it occurred post-halving, and only 2.56% of it occurred pre-halving, and that 2.56% move on its own represented 297% price gain. Once again, not a small amount. As we can see, diminishing returns in the percentage gain of each pre-halving bull market cycle, and percentage fewer percentage gain, or less I should say, percentage gain in post-halving cycle as well, so diminishing returns. We then see in the next cycle, we saw from the entire low, from the low of December 2018 through to the highs of November 2021, we saw that 91.6% of the total price move occurred post-halving, with only 8.4% of it occurring pre-halving, and that 8.4% represented a 177% gain to the date of the halving, and the post-halving move represented a 688% gain. So as you can see, diminishing returns each time. But the vast majority of the bull market occurs post-halving. 91.6% of it here, 97.44% of the entire bull market here, and 98.96% of it here. So what can we expect in this next one? Well, if you're interested as to what my projections for the price and the completion of this bull cycle are, there's a video available on my Patreon. You can find it on the Discord as well. If you sign up today, you can go and watch it, and I'll give you my price targets and how I've calculated where I think we're going and why. But essentially, we can guesstimate what this pre-market to the halving is going to be. Now, the last halving was the 18th of April. 2024, and we're not far away from where it began, but we can see that very little of the overall bull market has occurred post-halving yet. We know that we've still got to the end of October next year, but we know that this 295% gain is the pre-halving move. Now this is breaking the cycle a little bit, because this is actually more in common with the market, the really big impressive bull market of 15 to 17, where the pre-market or the pre-halving part of the bull market represented a pretty significant price gain in percentage terms of 297%. This is 295%, which is more significant than the gain made in the prior bull market of 177%. Not to where we went in that move, how high it went, but where price was at the time of the halving. When the moment the halving occurred, where was price? It was up 177% in that prior bull market. It was up 295% in this bull market. As I said, we got up to the prior highs sooner in this one, and we had to go sideways for longer. But an impressive initial move, I would argue. But if this trend were to continue, this gain here would represent a larger percentage of the overall bull market, just as this 8.4 was larger than the 2.5, was larger than the 1.04, and there's second half of the move, which is the post-halving move, will represent a smaller percentage, 91.6, smaller than 97.4, smaller than 98.96. Now, another interesting little measurement I made here is what the total post-halving move represents as a percentage of the previous cycle's total post-halving move. Now, that is correctly said, so I hope it makes sense. And we can see diminishing returns here as well. 24% of the prior move, 30% of the prior move, maybe it will be less here again. So if this continues to play out, time-wise we've got our time cycle, if this is our price projection cycle, then we can expect this figure here, which is the post-halving percentage move, this will be less than 91%. Maybe it could be 70%. That would be pretty drastic change. Maybe it could be 90. Maybe it could be somewhere in the 80s. Okay, but if the process continues, of diminishing the returns continues, which makes total sense as the market matures, then this will be less, and this segment of it, which is the first half up to the halving, this will be more, 8.4, 2.56, and maybe this will represent 10% of the overall move. Maybe it will represent 15% of the overall move. But as you can see, either way, the vast majority of the entire bull market, of low to high, low to high, low to high, the vast majority occurs post halving. Okay, so now let's introduce you to the long-term count. So we're going to turn off the halving data now. We're going to bring up the primary count, and we're just going to take this pitchfork off as it just gets in the way a little bit, although it is tracking really quite nicely at the moment. Let's just hide that out of the way. So essentially, using the time frame of the corrections and the severity of them, the corrective form and the severity of them, we determine what we think we're looking at on the longer term. So what I'm seeing here is a sharp correction, no new price level above the prior high, no new price extreme as we would call it for a B wave. For an expansive correction such as a sideways correction like a flat, I don't see that. We see a sharp correction, a zigzag down. This is the super cycle wave degree I've got it, which is our larger correction here of 86%. Our next bear market was an 84% drawdown, and once again no new price extreme above the prior high, so this is a sharp correction. And then our last bear market was also no new price extreme above the prior high, and this was a 77% drawdown. 77, 84, 86, and a very big one back here of 93. But this is where I begin the first super cycle degree. So I see sharp correction after sharp correction after sharp correction. I see no alternation between sharp and sideways, zigzags and flats. So what I see are very deep, severe drawdowns after 5 wave moves. So what I see is 1, 2, 1, 2, 1, 2. This is a wave free extension. And this is why we keep getting sharp structures, and this is why they keep being extremely deep and violent and aggressive and relatively short. But either way, this leads us into a super cycle wave 1 into 2, into a cycle wave 1 into 2, into a primary wave 1 into 2, and now we're working on several options. So we've only just come back and through the previous cycle highs. Okay, and we've had either several ways of looking at it. One, and what we're going to do actually is we're going to delete that orange count, and we're going to just focus on this primary interpretation first. We've got 1 into 2 at intermediate degree, and then 1 into 2 at minor degree. Now you might say, well, I don't like the look of that, Tom. That is not a nesting structure. True, it isn't, and it won't, and it isn't the first time or the last time you'll see 1, 2, 1, 2 separated by such a gulf. It happens more often than you realise. Yes, it is more common for them to be nesting within one another, intermediate into minor into minute, but you can have a runaway 1 within a count, just like you can have an extended 5th or an extended 3rd. You can have an extended 1. Now, but this isn't the only interpretation. 1, 2, 1, 2, and we're now into minor 3. Having done minute 1, 2, we're now into minor 3 of intermediate 3, of primary 3, of cycle 3, of super cycle 3. So we're into the real biggest part, the strongest part of the entire Bitcoin history at this point. If you think about where we've come from no one knowing what it is, to everyone still not knowing what it is, but a few people knowing what it is but thinking it's a joke, to some people realising it's not a joke and a lot of people still down crying it. And we've gone through these periods of public adoption until we get to the days in 2024 where Bitcoin's at all-time highs, Trump has been elected president, and we've got people literally talking about easing restrictions and regulations on crypto, adopting crypto in a broad sense to where the President of the United States is the owner of it and aware of it, and we even have talk of a strategic reserve. So we've gone from the first 1 and 2, no one knows what the hell's going on, to the next 1 and 2, more people know what's going on but no one's taking it seriously, to the next 1, 2, lots of people knowing what it is and more people taking it seriously, to the next one of the President of the United States taking it seriously. So it fits from a narrative perspective that this is 1 2 1 2 1 2. We're now into 3 4 3 4 3 4 over the coming decades or so, because this is the part where everyone knows and everyone adopts and everyone gets on board, and this is the greatest period of growth we're going to see. So that makes sense. It fits the narrative. Now, I'm not certain that that's exactly how it's going to play out, but I'm just saying it makes sense. So that's one way of talking about it. 1 2 1 2. There are a couple of alternates. So let's talk about those. This is an alternate idea where all the prior counters are the same, but we've already had 5 waves up, or we're very close to finishing 5 waves up into a 1 and a 2 again. So what this would lead to is 1 2 at cycle degree, 1 2 at prime degree, and now 1 2 at intermediate degree. And this would be a very nasty correction. Okay, another big drawdown. And then we move off into 3, 4 and 5 of cycle 3. So that's one way of interpreting it. Another way of interpreting it is that we've had 5 waves up into 1 into 2 at intermediate degree, and now we're out into intermediate degree 3. So this is 1 2 3. Okay, so we've gone 1 2 1 2 3 at intermediate degree of 3. So we're a bit further along than the primary count. Okay, and we're a lot later than the alternate count. But for the meantime, we're saying 1 2 1 2, and we're keeping the other counts on the back burner and seeing how they progress. Okay, so that is essentially the long-term Elliott wave count. So now we're just going to do some classical analysis, and then we'll get into the meat and gravy of a smaller time frame. Right, so some things we want to take note of and observe here. We're going to start on the daily time frame, bring up our moving averages. So we had a bit of a sell-off yesterday. Now, Mr. Powell, bless him, was busy in his post interest rate cut FOMC meeting talking up the US economy, and you must never do that. Because if you're talking up the US economy, you're talking down the probability of future rate cuts. Because why would we need them? We don't need to stimulate the economy if it's doing well. Now, the market doesn't really care about the real world and about the economy doing well. It cares about liquidity. And lower rates is what we're all in favour of. And now we get the impression or the argument to suggest that we're not going to get many rate cuts next year. 1 2 3 tops. Which means, oh well, liquidity cycle isn't going to be as strong, as preeminent, or as easy coming as it has been in prior rate cutting cycles where we've gone back down to zero pretty quick. So that upset the boat, and that rocked the boat a little bit. Now, that led to us breaking the 10-day exponential moving average and coming back to test to 20. Now, we wick through this occasionally, as we have done prior. But what we tend to see is the smaller wave degrees stay above the 20. The very small wave degrees stay above the 10. And the really small wave degrees don't even touch it. And then the larger wave degrees break it. And the larger, again, wave degrees break the 60. And the even larger ones break the 250. And that's exactly how it's playing out. So if we have had, for example, let's just talk about a wave 3. A 1 into a 2, a 1 into a 2. This could be 1 into 2 and 1 into 2. And then we've had a bunch of overlapping jinky jinky nonsense, right? Just ugly. Now, strangely enough, this is exactly what a wave 3 looks like. So if this is 1 and 2, and this is 3 and 4, this is 1 and 2, this is 3 and 4, then all of this overlappy disgusting nonsense with this one separate move where there is no overlapping, this is the 3 for 3, this is exactly what we'd expect the wave 3 extension to look like. And that's exactly what it's done. What does that mean? Well, it means that we are completing the larger wave degree 4s to marry up with this 1 and 2, 1 and 2, 1 and 2, 1 and 2. So we will continue to overlap until we finish a 5th wave, and then we will have a big pullback. That's what's going to happen. Most likely. How big? Time will tell. Post-Christmas maybe. Maybe it's begun now. Maybe it began yesterday. But we'll cover this in the smaller time frame counts. But either way, going back to classical analysis, we're still above all the major moving averages of the daily time frame, bar the 10, and they're all pointing up. So it still look very, very bullish. On the momentum indicators, it's a slightly different picture. What we have is a significant build-up of divergence. Okay, which we're just going to introduce here. We have divergence here. Sorry, not hidden. It was very much visible. And this is on the RSI. And we want this to be visible current interval. Now we want to change that to bearish divergence. Why did it disappear again? There we go. Double divergence, double bearish divergence actually. Now, I would normally say this is divergence between current price and previous highs. However, we have a pretty clear pivot in place on a daily time frame, not on the weekly yet because we haven't finished the week, but on a weekly time frame we've got a big bearish engulfing candle. Right, so we have to be aware that this could be longer term divergence starting to play out, which would suggest a more significant pullback. We have the same here on the MACD. We can see how since coming into these highs the momentum has slacked off considerably. Okay. For some reason, it just does not want to save it to this time frame. Now, I have no idea why that is, but we'll just keep correcting it. And we can see roughly flat here in the ABV. So you might say, well, that's not divergence. Well, if one's going up and the other one's not going up, that's divergence. It doesn't have to be going down and doing the opposite. It just has to be diverging from. And that's what it's doing. So it is definitely doing that. So there's your bearish divergence on multiple levels on the daily time frame. We've been making higher highs in price, lower highs in RSI, lower highs in MACD, and similar highs or flat in the OBV. So we're getting weaker and weaker and weaker into these highs. So if we are going 1 2 1 2 1 2 1 2 3 4 3 4 3 4 3 4, stands to reason that we're going to finish sometime soon, and then we're going to have a correction. And that's how I see things on the daily time frame. Now if we come out to the weekly, we can see we're above the 10, the 20, 60 and 250 weekly exponential moving averages, and we have no sign of breaching the 10 or the 20 or the 60 on the weekly time frame, so we know that we haven't completed a larger wave degree yet, like we did here, like we did there. Now we're back at overbought conditions on the weekly time frame. Weekly momentum has actually swung to a new high. So I don't think we can call we can call these highs here next to one another and look for divergence there into this high, but this is a larger correction where we've reset. So I'm not sure we can really, we'd have to look at the monthly time frame between these two highs and see if there's divergence there. No divergence anyway to confirm on the momentum indicators, and the OBV isn't confirming either. So I would be reluctant to label that bearish divergence. I think just on giving the bears their due, I will do it anyway. But since there is no weekly pivot in place, I will say it's bearish divergence between prior highs and current price. It is not confirmed bearish divergence, and it is not confirmed by the MACD or the OBV, which is still swinging higher and show no weekly divergence with prior highs. So in that regard, we're still in a longer term bullish cycle, bullish move higher. On the monthly time frame, this one is supposed to be, we can see on the monthly time frame, now we're close enough to potentially call that bearish divergence. Okay, between this high and this high, because they're close enough in peaks now to be considered bearish divergence, but there is no monthly pivot in place either. Once again, the MACD swings to new all-time highs and does not confirm, and the OBV swings to a new high and does not confirm. This is not the way a bull market dies. Alright? So in that sense, it feels like temporary pullback, but then we will eventually move higher. Now, it could be quite a nasty pullback, but we will eventually move higher. So that's how I see the classical analysis for Bitcoin here on the BLX. Now that we've done all of that, let's come in now and have a look at the shorter term Elliott wave counts. Okay, so now we come down to the smaller time frame and we get into the nitty gritty. And this is ugly, right? And there's a lot of things it could be. It's that simple. We do have a primary count, but there's a lot of perfectly valid ideas here, and I don't want to discount any of them. So you're just going to have to bear with me. And I'm going to try and keep it as simple as possible. And I want to start there by making it as simple as possible. We're going to get rid of all of this noise. We'll come into the smaller time frame and have a look at this in a bit. But we're going to get rid of all this noise and to talk through the absolute simple longer term ideas since the low of November 22. Primary idea first, which is this one. And we've got an even simpler version of it, which is this. 1 into 2. 1 into 2. 1 into 2. We've now got 3 into 4. 3 into 4. 3 into 4 going higher. 1, 2, 3, 4, 5. Off we go. And we're in that 3 over 3. Okay? Next idea. 1, 2, 3, 4, 5 into 1. Back into 2. And then now this will be a 1. I don't know if it's finished yet. It might be, it might not be. Into 2. And then will be 3, 4, 5. This is even more bullish. This suggests that instead of the first wave 1, 2 back here, it's all the way up here, so much more gains to be made. Super bearish count, the third and final count, super bearish. 1, 2, 3, 4, 5. Intermediate 1 will finish. This was primary 1 into primary 2. This will turn out to be intermediate 1 into intermediate 2. Shorter bull market, shorter bear market, significantly smaller wave degree, breaks the 4-year cycle. We come all the way back to 30-odd thousand in a 2, and then we're off in a 3. Really nasty, really ugly, but secretly hoping it's true, if I'm honest, because I'm a greedy bugger, and I always want to buy Bitcoin cheaper, but I think the odds of this being correct are pretty low. But if it does turn out to be true, I'm not going to complain. So there's your simple ideas. Now we need to come into the smaller time frame. Now the smaller time frame is as obvious as it gets. You know, anyone who knows Elliott wave knows that these are a series of overlapping 2s, and these are a series of overlapping 4s. Right? It's absolutely self-evident. It's not clean. Don't expect it to be clean for Pete's sake, but it's clear what it is. It's a wave 3 extension. So what is it a wave 3 extension of? Well, it's either this pivot, 1 into 2, and this is the wave 3 extension, or it's a wave 3 extension within a larger 1, which comes back into a 2, which is a wave degree less than this, and then goes off in a 3. And that's essentially what we've got the options of looking at. So let's have a look at how we can count it. And there's a multitude of ways. Short time frame, short time frame, short time frame, short time frame. So let's not fuck about with all of them. Let's just pick one. Let's go with this idea. 1, 2, base channel, minute degree. 1, 2, base channel, minuet degree. 1, 2, base channel to median line, sub-minuet degree, breakout within the 3. 1, 2, 3, 4, 5 micro waves into sub-minuet 3. ABC running flat into sub-minuet 4. Ending contracting diagonal, sub-minuet 5, minuet 3. So we've now got minuet 4, whatever the hell that's going to be. And then we've got minuet 5, and then we've got minute 4, and then we've got minute 5. And I haven't placed these, by the way, guys. They're just literally hanging around here waiting to happen. Okay, so then we'll get, you see what I'm saying? 3 into 4, 3 into 4, 3 into 4, 3 into 4, and we'll just keep doing that until we get to the highs of our minor 3. Here's minor 1, minor 2. We are in minor 3. We've got all of that to do to get to minor 3. Okay, and that's one way of interpreting it. And there are, like I said, other ways of doing it. Other ways of doing it. But we're just not going to bother with them because there's just too many to go through. We're going to look at this and then we're going to look at an alternative idea. 1, 2, 3, 4, 5, blah, blah, blah. And we're now overlapping wave 4s. What if we've got a top in place? Okay. Now, it doesn't have to be in yet. This could be 3, 4, 3, 4 again. 1, 2, 3, 4, 5. And this one could be higher. That's totally possible. Don't run away with the idea that it has to either be top or no. Let's just put a 1 and a 2 and a 3 and a 4 and a 5 here at minute degree, just to remind us that it could be further away. Okay, that is absolutely possible. Minute degree orange, and therefore that leads to a possible 1 into 2 at minute degree. Right, I'm just suggesting that the 3/4s could still be going on. But what if it's topped? 1 into 2 at minuet, not minute degree. 3 into 4 at minuet degree. 5 at minuet degree. This completes minute 1. And then we come all the way back in minute 2. And this will come back. If this happens, it will come back to 73 grand. Because there's no way we wouldn't want to test that support. You know, back tested here, resistance here, here, all these highs. It will be coming back to that level. It's between the 50 and the 61.8. It'd be an amazing opportunity. Another wave 2. This is that simple account we saw a moment ago. Let's put this in place. Turn off the primary again. Simple count 2. Well, actually, this idea where it's 1 into 2 with either going up in the 3 or it's 1 into 2 again. So let's just put that there. Add it to the simple count because it's a possibility. Change that to orange. So 1, 2 at minor degree, 1, 2 at minute degree. This also fits into the other simple count we saw, which is that this was 1, 2 at intermediate degree, and this is going to be 1, 2 at minor degree. Okay, both are possible. So let's just sum up again. So primary count, 1, 2 at minor degree completed at 49577, and we're either going up in a series of overlapping 4s, which we're still in now, and will continue. If we violently break down and we come through all of this prior demand and prior structure that's here in the wave 4, alright, if we come through all of this and slice through it all like butter, and we come racing down through all of that, and we come racing down through here, then it's likely that we topped. Okay, hindsight's a wonderful thing, and it's likely that we topped here. If we continue to just overlap, then we're just going higher in a series of wave 4s. Okay, and that's how I think we can look at that count. For the moment, we're in an upward trend of higher highs and higher lows. So we don't jump the gun. We don't scream it's the top. We have no evidence that it is. Right? We do have divergence building up over the shorter time frame. We pointed to that earlier on in the video in the classical analysis segment. On the daily time frame, there is divergence building up across these highs, and therefore this could be a peak. Now, if it is, my guesstimation would be that it looks like that. That we've had 1 into 2 and 1 into 2 again. And this could be minor into minute, and this could be intermediate into minor. Either way, it's 1, 2, 1, 2 again. This will likely come back to the 73,000 level, maybe a bit lower. It will seek out between the 50 and the 78.6. Likely maybe hitting the 61.8 golden ratio at 62.034. If we come in there, that's likely going to be support, and we will get we will look for a reaction out of here, pull back to trade off of higher, and that's how we top here at the moment. And that is essentially the shorter time frame in a nutshell. So let's just come out to the 8 hour for a minute and talk through these alternate ideas. So I mentioned earlier the idea that this is wave 1 into wave 2 here. This is simple count 2. Okay. This, I think, leans into the idea that we will be getting another wave 2 correction. But as you can see, it's potentially possible for these wave 4s to continue to overlap for longer until we find that wave 1. That's always possible. In each of the counts, this overlapping process could continue for longer. So we could go 1, 2, 3, 4, 5, minor 1 into minor 2. Right? Just like here. Minor, intermediate 1, minor 1 into minor 2. Could be higher before it comes back. We could still be overlapping, but it could be in because of that short time frame top count that we've got. Then there's the idea that we've had 1, 2, 3, 4, 5, and we're in a blow-off fifth, right? Intermediate degree. So this will be... where's my bloody drawing tool gone? So it's the only one I can never find when I need it. There it is. So this will be a blow-off fifth. And this will be 1, 2 at minor degree, 3, 4 and 5. And this will take us in an extended fifth to complete the primary 3. And then there's the bearish count, right? Which is that we've had 5 waves up. We're close to finishing 5 or we're about to finish 5 relatively soon. Right, 3, 4, 3, 4, 3, 4, 5. It could even be in now. Both are possible because we've seen the shorter term counts. This is going to be brutal. And this is going to bring us back way deeper into intermediate 2. So recap and simple wave 3 count here. All the way back. The primary, just to be clear, is that it's 1 into 2, 1 into 2, or 1 into 2 here, and we're overlapping again and again and again. So that short term count, 3, 4, 3, 4, 3, 4, we keep overlapping 3, 4s until we find the top of minor 3, or we put in one more wave 1 into wave 2 at minute degree before going higher, but we do not come down below 49577. We likely stop somewhere in the 70s if we come back at all. Alright, if we were to breach that low 49577, this count is incorrect. It is wrong. And therefore we have to then also discount the alternative count of 1 into 2 here. That is also wrong. So that pivot, that major pivot back at 49577, that is either the bottom of a minor wave 2, an intermediate wave 2, leading into either a series of 3s and 4s going up into minor 3, or a minute 1 into minute 2, or a minor 1 into minor 2 within intermediate degree. I hope this makes fucking sense. I know it sounds like a bunch of goddamn gobbledygook, and that's why I find when you've got this many options, it's annoying, because there's no easy way of explaining it all. Okay, there's just no easy way of explaining it all. We're in an upward trend of higher highs and higher lows. Bitcoin keeps heading higher. There's a bunch of overlapping price data in the short term that suggests a bunch of wave 4s overlapping. Right, traditionally we will now find a 5, right, at some degree, and then we will correct. That's how I think I'm leaning into it. I feel that that is the more likely case. Okay, but I don't see us coming back below 49577. If anything, I don't see us coming back beyond the prior highs, really. Maybe we'll dip our toes in the water and go through them, but we don't have to. We can just keep marching from here. We can just keep marching. 1, 2. Okay, let's just show you again. So 1, 2, 1, 2, 1, 2, 1, 2, 1, 2, 3, 4, 3, 4, 3, 4, 3, 4, 3, 4, 3, 4, 5. We can just keep doing that until we find the minor wave 3. So we don't have to have a big correction. You see what I'm saying? But if we are going to, my bet would be we come back into this prior price territory. Okay. And what we've done is 1, 2. I wish it was simpler than that, guys. I really do. But we've just got so many options on the table. It will clear up. I swear. It will clear up. Things will become clearer over time. But we just don't know at the moment. And I wish there was a quicker and easier way of explaining it. I just know that on the longer time frame, things are looking pretty tidy. We are still in a clear upward trend of higher highs and higher lows. We should not be jumping the gun on breaking that assumption. We are respecting geometry all over the place. I've gone into some of these fib channels before, where we are simply moving from level to level, neatly as we go. We've just come up to the 38.2 on this one. I think I've got a better set actually on the BLX, come to think of it. So look at all my fib channels. Now, some of these are being used unconventionally. I'm using some of them inverted, some of them traditionally, and some of them are inverted. I don't really care. I'm just trying to find confluence between all of the different pieces of technical analysis. So we've got one like this where we corrected back to the golden zone, moved higher through the 50 to the 38.2, which we see was prior support, prior resistance. We've got other ones like this one, okay, which show prior support, prior resistance. This was prior resistance here, and support is now resistance again. We can see an inverse version of it here, where we came off a 23.6 through the 50 off a 38.2, and this was prior resistance. We can see a long-term one here where we come off of a 61.8, which goes all the way back to the primary pivot back in 2013, and we've come up to the golden zone, back up to the 50, back to the golden zone, and away. We continue to move through these fib channels, through these pitchforks, through these Fibonacci levels. The trend is up. Long term, it's higher highs and higher lows. And that is where I'm going to have to leave it, because I've gone on and on and on today, haven't I? So I wish it was simpler than that, guys, but over the shorter term, it's not. My guts tell me that we're heading for a correction over the shorter term. We have bearish divergence on the RSI, bearish divergence on the MACD. We have bearish divergence, we have bearish divergence on the OBV over the shorter term as well. Everything's making lower highs apart from the price. So some kind of pullback now. Either we finished 5 up and we come back 1 into 2, or we finished a larger 3 into 4, we come back a bit before going higher. There you go. I'm going to leave it there because I'm going to confuse myself at this rate. Alright guys, thank you very much for joining me. If you're new to the channel and you like what you've seen, smash the like, hit the little bell notification icon to remain informed of future video releases. And if you're not a member of the Patreon, please consider signing up and learning Elliott Way for yourself and getting weekly exclusive videos, the occasional live stream, a bunch of educational content, including the Elliott Way series. Links in the description box below, and if you're not following me on Twitter, link is there as well. Thank you very much for joining me on this technical analysis of Bitcoin, and take care of yourselves, guys. I'll be back with you as soon as I can, and if I don't see you again before, have a very Merry Christmas. All the best. Bye-bye.